Hi, welcome to WealthMills Securities Weekly Market Wrap. We are witnessing a rally across the globe in equity markets. It is starting from Dow, European markets, and Indian markets also participating in the global rally. People were anticipated it's a 1929 crash or 1987 crash or 1999 dot-com bubble. But markets are rallying across the globe. The main reason for this rally, you are all aware how the central banks and the governments across the globe, how they are bringing the stimulus packages to overcome the liquidity crunch in the economy. The main thing we can see, the 10-year benchmark yield of United States, which is trading at almost all negative levels, that making the people to look for avenues to invest. And in front of people, the main investment avenue is after the debt is equity market. So the risk adjusted investors across the globe, they are trying to take and participate in equity markets, and they want to have some exposure as the debt instruments are giving negative yield, negative returns. So they are not earning anything in debt market. So the money has been channelized and moving towards equity markets across the globe. Today in India, the 10-year yield of Indian GSEC is the yield dropped below 6%. So what does it mean? It transpires people to look for avenues where the risk reward ratios might be adjusted and equity markets can give a premium returns over a period of time. So the money has been moving across the globe towards the equity markets. And coming to the good news, as we are in lockdown, this is absolutely good news for Reliance Industries. The market cap of Reliance Industries touched today 10 lakh crores. As we are all locked in and restricted to homes, but the market capitalization of Reliance Industries touched from 7 lakh crores to 10 lakh crores. That is a 30% increase on the market cap in past 2 months. Our view on Reliance Industries is quite neutral. We want to wait and watch for some time to take any exposure in Reliance Industries. We are not in a hurry to buy any stake in Reliance Industries at present. We are advising investors to wait and see the opportunity. If there is any dip after the rights issue, if the valuations are attractive, then we can look forward to take any stance in Reliance Industries. We were very attractive at Reliance Industries when the prices were around 800 levels, but now it's not the good level to enter into Reliance Industries at the current minute, and as per the current market conditions are concerned. While coming to the sectors where we can invest, where we can see value, in terms of traveling, tourism, and also aviation sectors, these are the currently depressed sectors, and the news is there from last week from the AGM of Berkshire Hathaway. Warren Buffett sold his stakes in airlines industry. That brought gloom and doom to aviation stocks across the globe. But while coming to the Indian markets, we have only 2 listed companies in terms of aviation is concerned. India is a very nascent market in terms of aviation is concerned. We have it is premature to say the aviation is over in India. No, there is a lot of upside is there in aviation in India. But one thing is, Indian aviation stocks are not that much leveraged when compared to the big aviation companies across the globe, and the percentage of people travel through using aviation is very less in India. So we will see at a right point of time to enter into a aviation stock. We'll share it with all our investors what is the best aviation stock to look in. But by and large, we are looking SpiceJet as the aviation stock. We are exploring and we are studying, and we have not started taking any position in SpiceJet at moment, but at a very attractive level, we try to take some position in SpiceJet kind of aviation stories. The main reason is one thing is it might be Warren Buffett or Berkshire Hathaway might be negative on aviation, but one thing we want to tell our investors in India, the aviation story is at a very nascent stage. It is a growing story, India, and one thing is the mankind always historically, irrespective of despite of many events that occurred and taken place across the globe, the mankind was mobile, and they are always in mobility. So once this COVID-19 crisis get concluded, people will be on their move. And also we are looking for travel industry, where we are looking some stocks which are coming to very attractive levels, and hotel industry which are coming to very attractive levels. We are not in a hurry to go and jump the stocks at moment. We are exploring and we are studying the business models. The main reason is the human mankind always in mobile, and they're bound to move from one place to another place. And when the people want to explore the world, the key beneficiaries are tourism and travel industry and the hotel industries. At present, the negativity in the market is priced in. We'll be waiting when this the economy will come into again on the right track. At that point of time, we'll see and pick up stocks at a right time. For example, currently, if you look at the Indian hotels, where the iconic Taj brands held by this group, by this company in India, for example, in September 11 attacks, the Taj was attacked in Mumbai. It witnessed many deaths in the premises itself. But post that, the life came back into normalcy. The people started occupying the hotel rooms, and it is as normal as it was. So as Taj brand is concerned, it's an iconic brand in India. So Indian hotels, we can look forward as the stock come to a good level as the valuation corrects. And also there are other companies where with a strong business model, like a annuity kind of business model, stocks are available. And I just want to tell you, the wealth can be created when the sector gets depressed. Dr. Mark Faber, who is the equity guru in Asia Pacific region, he always says when there is a depressed mood in the market, that is the best time to go and buy stocks. When in 2011-12, when there was a big crisis, that is Portuguese, Ireland, Italy, Greece crisis were there, he went and bought equities in Greece, and that given a fabulous return to him. But nobody dared to invest in Greece at that point of time. But it given a fabulous return to him. So there are some certain points where when there is a lot of negativity across that particular sector, that is the time when the valuations look attractive, when there is a earning visibility, that is the time you can go and buy stocks at a very compelling valuations. So even though the world might say they might be negative at the tourism and hotel industry as well as aviation sector, that the sectors we are currently, our research team, the team with me, we are exploring currently the opportunities in this stocks. And when we one stock with a very good annuity business model, that stock that was there on our radar from quite a long time. We have been tracking this stock from quite a long time, nearly 2 years. now for the same stock the valuations are very attractive. It is a annuity business model. We will release a report on that particular stock soon, and I will share it with all your investors in person, not on public domain, on a public channel. Currently, as per the Indian markets are concerned, markets are anticipating a stimulus package. This has been, markets have been waiting from quite a few weeks. As per the news that is coming with different sources, that there are around $22 billion of stimulus package Indian government is considering for the industry. It can be for the economy as well as the industry. We need to wait and watch how far the quantum of stimulus package that's coming. But currently Indian markets are blindly following the footsteps of Dow and the other global indices. This is the main reason why Indian markets are following the suit with the global indices. And as per domestically, things are not improved that much. Still the lockdown is on, and there is no significant amount of positive data that's coming into the industry. As the macro indicators, economic indicators are concerned, they are quite depressed as on date also. But this is a liquidity led rally. If you are not buying, somebody is going and buying the stocks. So we should not be late, but at the same point of time we should not go and jump and buy the stocks. We should be in a mode, it is a buy on dips market, and to build up a good healthy portfolio. As per the optimism is concerned, you can see in the map, the Indian stock market is expected to, Indian economy is expected to recover fast when compared to any other economies across the globe. This is a McKinsey report, what I'm sharing with you. And this is what I have for this week for all our investors. I wish all a good health, and also please stay home and do take care about your health. Thank you.